Alright, welcome to my trading reflection week 3. I will go over every trade I took, either it's a win or a loss. I'll go over every mistake I made, every good decision I did. So yeah, let's learn together and let's go over them right now. I took a total of 7 trades this week. I know a little bit overexposed, but still ended up in profit. Not that much, I think only 2.4%. But yeah, let's go over all of them right now. So this is the first trade. It was on October 9th. This is on Monday. It was on Bitcoin, New York session. The daily and the weekly were bullish. And my confluence was that there was a value area low, so the volume profile and the wick fill, and price was coming to this zone. And yeah, let's see. This was the point of interest. Ended up being a loss on Monday. So bad beginning of the week. What did I learn from this? Let's see. There were too many sweeps. Like firstly, I always like wait for 2 or 3 sweeps, and these were like 1, 2, 3, 4, so a little bit choppy. It's also Monday, so didn't really like this trade, but I was just, I think, FOMOing in because I wanted to be in the trade. So the thing that I learned from this is exactly like I said, FOMO. If the break of structure candle is a minute 5 candle, I need to wait at least for the minute 15 candle to close above the high, giving signs of valid displacement. Also choppy PA, too many sweeps, not a good setup. So the first thing I said here is that basically I FOMO'd in once I saw this minute 5 break of structure, but actually once I entered right here on the break of structure tab, targeting a higher targets, then I really just got fucked immediately, got literally towards my stop loss afterwards, because I didn't wait for another minute 5 candle to close above this high. So basically this was a sweep, and on the minute 15 time frame this was clearly a sweep because yeah, we didn't close above this high. So I need to wait at least for 2 minute 5 candles the next time, or just a minute 15 candle to close clearly above this high. To confirm valid displacement, of course, and also just like I said, too many sweeps and Monday, so bad trade. And I go to the next one. Let's see. It was a gold trade on Tuesday, 0.5% risk, New York. Daily and weekly was bearish, but very bullish on the POI midterm time frame. So this is a very interesting thing, because normally I only trade like the daily bias, and we were very bearish on the daily and on the weekly. But if the mid time frame is very bullish, I don't want to like counter trade that, right? Only if we're entering like very important high time frame points of interest. But in this case, we were very bullish on the, like you see, this is the minute 5 time frame. We were very bullish. So we came into the discount right here, so I was looking too long, but actually not that good, because I wasn't following, it wasn't aligning with the daily bias, the weekly bias. So this ended up also being a loss. The only point of interest was a demand zone. This was the demand zone. Why is this a good demand zone? Because like you see, orders got filled here and BAM, literally just skyrocketed here. So this is a very strong one. Also swept some liquidity, not that much, so not that significant of a point of interest, but still, yeah, I wanted to enter because we swept this first low in the POI, and then we broke structure with this high. But yeah, looking at it right now, it just mitigated like this order block and just respecting the bearish order flow. So not a good trade, not following daily bias. Let's see what I wrote down also. FOMO, no valid displacement, also no rough sweeps, looks like just retracement. Yeah, like I said, just looks like a retracement, and no, like why did I say no rough sweeps? Is because I want to see like a sweep that's like bomb and straight up, right? Maybe it makes no sense if I say this, but the sweeps need to be aggressive, right? Not like tiny sweeps and then break of structure. It needs to be a tiny sweep and a great displacement, right? So yeah, that's also something I need to take note of. So 2 losses on Monday, 1 loss on Monday and 1 loss on Tuesday. And then I made a comeback on on Tuesday, 2. On the same day, took a GBP USD trade because the daily was bullish, weekly still bearish, but mid time frame really bullish. So basically the bullish signs were higher because yeah, it was about to turn bullish on the daily, so the weekly doesn't really has much significance then, and the mid time frame was also really bullish, so I don't want to counter trade it. So as you can see, this was a good trade. Let's see what the point of interest was. I think it was just like a fair value gap right here. And also, this is a very important thing, guys. You see this candle on the minute 15, it doesn't have like a lower wick, right? So I also use this as a point of interest because it just means that there was not enough time to fill orders because there was no mitigation of this fair value gap, and this has no lower wick. So I can also use this as a nice point of interest, a nice liquidity point, to take trades from. So as you can see on the minute 15 time frame, one sweep, second sweep, and then we break structure. I think it was right here. Let's see. So yeah, the point of interest was an hour 4 fair value gap and a dry candle. I think I should use this. I should use the word flat candle better than dry candle, but you know what I mean. So double sweep, still FOMO, but a nice trade. So it was a 1.21 R because I only risked 0.5 R. So low risk. My improvement was bad entries. Should only look for the super good entries. Also notice that I should not trade pre-session. Oh yeah. So as this is just mostly manipulation, and the real moves happen 30 minutes or a few hours after session open. So yeah, here I really realized that, okay, New York Open, this is where you really need to look for trades. And if I see this displacement before a session, then it's mostly like manipulation. I will come back to this because there's a really good example later in this video. So let's go to the next trade. So we are up. I don't know why this is 0.1. Maybe because, oh yeah, I forgot to say I didn't hit stop loss right here. I just closed it right here once I saw bearish continuation. So this was not a stop loss, it was a really small loss because I closed it near break even. So let's go to the next one. It was a gold trade, very good one. I risk is on my 10k challenge account, so higher risk because I don't really care if I breach that account. The daily and the weekly was bearish, but very bullish on the POI midterm time frame. So again, yeah, this was a great trade. So we were very bearish on the daily because we didn't break structure to the upside, and also on the weekly very bearish. But we were looking like I can show you right now on gold, just the whole week. We were like this, right? This was the week just going up, but still the daily was essentially, in theory, was still bearish. So that's why this was against the trend. But if the mid time frame, and the mid time frame I mean hour 4 and hour 1, is bullish, that's when I still not follow the daily bias, because I'm not gonna counter trade the hour 4 time frame, because that's also a really good time frame to look for your bias. So really simple. This was a demand zone, fair value gap, tapped once, fake bounce, and continuation sweep. Then we got our breakout structure right here with this high. I think, I don't know why I marked this, but actually this is the valid breakout structure because this brought us to our last low, and then we break it right here, and then I enter on, yeah, just somewhere after the breakout structure on the retracement. And this was a really good trade. As you can see, it almost went to my stop loss, but because we had a valid breakout structure, this low should actually have been protected, which it got protected because, yeah, we had the breakout structure. So really scared moment right here, but still went to my take profits. Let's see what I could have learned even from a win. You also always need to write down also your improvements. Either it's a win or a loss, doesn't matter. What could have done better? This was a re-entry after previous lost gold trade, break even. This was after New York Open. So this is what I want to say, guys. I had a bad trade on gold previously because it was pre-session, right? And I said mostly that's like manipulation, and the real moves happen like 30 minutes or an hour after London Open or New York Open. So also a valid breakout structure with a lot of momentum and rapid sweeps. Don't panic if it looks like it's going to your stop loss, like I said, because it was a trap for shorters and it didn't stop me out, right? So if it goes almost to my stop loss, what does this mean? Well, it means that people are going to short and put their stop loss right here. So it builds a lot of liquidity, and then literally price takes it out and goes to my take profit. So a really nice trade. There was 3R, and yeah, so really good one. Best trade of the week. on gold. And so yeah, let's go to the next one. Was Euro USD. Let's see what we got here for Euro USD. This was a classic AMD pattern in my opinion. We had some really nice liquidity buildup in the form of we call this accumulation. It's actually just consolidation. And then we got our manipulation, and the manipulation happens at an order block on the higher time frame. So basically we consolidate, we take out the first liquidity, the range high liquidity right here, and then we tap. By doing this, we tap into an area of interest, and then we get a break of structure with the low. So I thought it was a nice entry, and also this was a thing against the trend, but still we were topped out on the retracement on the higher time frame. So that's why I also wanted to target lower levels. So why was this I don't know if it was a win or a loss. So let's see, Euro USD stopped out and break even. Good choice to set it break even, but I should have closed profits on that news drop. Mostly that's the fake move. Also don't think that every wick is gonna get filled immediately. Also traded against a trend. Okay, so first of all, I traded against a trend. Second of all, it went nice profits because news was happening. I didn't close it, but I set my stop loss to break even. So my lesson from this is I should close profits more often, especially when it's news, because when news is happening, you usually see like one big move to one liquidity point and then just wrecks to the other side, right? It just goes bam, bam, or bam, bam. So I should have closed profits earlier when I saw this big dump, and not just hope that it's going to dump further, right? Especially when it's news. News doesn't really change the price action in my opinion, but still take profits more often. So yeah, to the next trade. So this was basically break even. Got stopped out because I didn't shave profits. The second last one was on gold. This was a good trade actually, but this was hitting my stop loss because let's see. First of all, we just had this order block. This was not that clean of a price action, but I still wanted to take this trade because the sweeps were very clean. As you can see, this order block right here, this white, I'm gonna zoom in. No, I can't. Okay, no matter what. So order block, one sweep, second sweep, break of structure, and just following this bearish order flow on the lower time frame. So yeah, nice trade. I didn't take profits, went immediately towards my stop loss afterwards. But yeah, let's see what I could have done better. Didn't take profits and moved stop loss to break even back to original. Okay, this is a very big mistake I made, guys. So what did I do basically is I didn't take profits first of all, and I moved my stop loss to break even. But once I saw that price right here bounced, I set my stop loss from break even to my original position. This is a really bad mistake because I lost money because I moved my stop loss from break even to this price point, and that's something you should never do, and I will never do this ever again, because I just thought, okay, price can just go to break even and still go to my take profit, but just don't make these decisions. Maybe it makes sense for you because you still wanted it to go to your take profit, but just be sure and leave it at break even. That's the best thing you can actually do. So yeah, the last trade I took was a loss on Bitcoin. This was a really clean trade because we are in a range right here, and we swept this high first, swept this high, and then this high. So we were basically trading at the range high, so we can now look for maybe plays towards the range low. On the high time frame we were bearish, so that's why I was targeting lower levels. We broke structure after these sweeps, and then I wanted to enter right here on this high. Basically what the mistake was, or let's see, should have stayed flat after the win week. Nice trade, but Friday night is not favorable to trade because crypto is not really respecting price action in my opinion in the weekend. So yeah, nice trade actually, but right time. So I have to understand that time and price go hand in hand, right? If it's a good setup but the timing is wrong, then the setup can also be wrong. So you have to trade at favorable times. So during the week, at New York Open, London Open, just all these good times, but not on Friday night on the crypto market. That's not just a favorable time to trade. Of course, there are a lot of excuses, but I can just like tell some things to you guys, why this maybe was been a bad trade. Otherwise, was a good setup, but the timing was just not right. So yeah, really the most important thing I learned from this week, my 3 biggest mistakes was: first, I need to put time and price together, like this mistake I made. Second of all, after a win week, so I was like up 4% on the week after the GBP trade and the gold trade, then it's a decision to just stop trading for the week. Up 4% of the week is amazing. Like, let's say you can do that 3 weeks in a row, that's 12% on the month. That's crazy. So I should have made the decision to just stay flat and don't touch the markets after Wednesday or Thursday. I didn't do that, and I had 2 losses afterwards. So this just shows you that you really need to, just take your wins and go wait for the next week. The third mistake is that I should, not a mistake, just a general note, is that I should always wait for manipulation pre-session and then catch the real moves during a session. Not just before a session, because that can sometimes be the manipulation. So yeah, those things really are in my head. I mean, in general, I had a good week. This is my 50k account right now. I'm only 0.5% profit, but hey, that's better than in a loss. And on the 10k account, I am 2% into profit, so that's not bad. I'm not in a loss. I'm just learning, and really, with really small steps, I'm getting towards my maybe phase 1 target. So yeah, that was basically my trading week. I hope you had any value in this video. If so, a like and a subscribe is free, so I'd really appreciate that. Wish you an amazing rest of your weekend, and we'll kill next trading week. Let's go.